Hello and welcome to the Of Interest podcast. I'm Gareth Vaughan from interest.co.nz. With 2023 being an election year, expect to hear plenty of hot takes about government debt from politicians and others over coming months. Some of these views may be well informed, but others may not be. So just what is our government's debt? Who does it borrow from? And how does it pay the debt back? To answer these questions and much more, I'm joined by Kim Martin. Kim is Director of New Zealand Debt Management, which is the Treasury unit responsible for managing the government's debt. Hi, Kim, and welcome to the Of Interest podcast. It's great to have you here with us.
Hi, good afternoon.
Look, can you just maybe kick off by telling us a little bit about the New Zealand Debt Management as your unit is known, or NZDM? What your mandate is, maybe how many people work with you there, and a little bit about what your role actually entails, your personal role.
Yeah, sure. So New Zealand Debt Management is within the wider Treasury. As you're probably aware, Treasury is the government's main fiscal and economic advisor, and we're a unit of about, I think, 45 people, and I'm the director here. And our mandate is to the most public side, which we're going to cover off here, is managing the government's borrowing program. And the core objective there is to minimise the cost of that borrowing over the long term, while also being very mindful of the risks. So we're made up of various teams, a bit like a bank. We have a front and middle and back office, and we have our own technology support. So we're pretty well set up in terms of being operational, and we have some delegated mandates from the Minister to enable us to get on and do that on the Minister of Finance's behalf.
Now, just before we started recording, we were chatting a bit, as we do, testing the sound and everything, and you noted that with some of your personal experience, that even people that you know quite well didn't perhaps really have a great understanding of what you did, but obviously through the COVID period, it's increased the profile of government debt, and by definition also the NZDM. So, I mean, how has that sort of process been for you?
Yeah, so New Zealand Debt Management's been around for decades, and I guess when things are going well, it's quite low profile, and we're busy beavering away. And many of my friends, I'm sure, didn't have any idea about what I do or what we do. And it was really interesting during that COVID period where it was suddenly thrust into headlines. People were quite curious. Also, where does this money actually come from? And during that period, I did some sort of radio interviews, that kind of thing, to try and just give some really succinct, easy to understand information, because it is, as I said, generally something that goes on in the background.
Yeah, absolutely. But bubbles to the surface every now and again, which obviously, as you say, has done through COVID. So, look, let's just look at what forms of borrowing that the NZDM does undertake on behalf of the government. I mean, how do you borrow money?
Yeah, so we issue New Zealand government bonds. That's our primary vehicle, and I guess you could think of them a bit like an IOU. So we promise to pay back the money that investors give us at some future date, at a set date called the maturity date, and we will also pay the investor a coupon. So that's twice a year we pay the coupon, and you can think of it that a bit like the interest you get when you do a fixed term deposit. So they're bonds. The shortest maturity we have is a May 2024, and then the longest is right out to May 2051. So that's almost 30 years. So that's the main form of borrowing. We have nominal bonds, and we also have inflation index bonds. So they're very similar, but the coupon you get is indexed to the inflation outcomes as set by the CPI, the consumer price inflation. And then over and above all of that, we have what we call short-dated instruments. So they're less than 1 year, and they're called Treasury bills. Or if we issue those short-dated instruments in another currency other than New Zealand dollars, it's called European commercial paper. So they're really the main ways that we can borrow on behalf of the government.
And who do you sell these bonds to? I mean, who are the investors that buy them, and where are they from?
So It's our aim to make the investor base as diverse as possible. So you're not getting all your eggs in one basket. And they are investors on all parts of the world. New Zealand is reasonably unusual in having a large proportion of our bonds are held offshore. So currently, I think it's sitting around 60% of our bonds are held by non-residents. And then we also aim to have diversity by the investor type. So by that we mean we have fund managers. For example, if you've got a KiwiSaver, some of your KiwiSaver funds may be held in New Zealand government bonds. They're held by banks and traders, central banks, and hedge funds. So really, it's very diverse by type and by where they're located around the world.
What about retail investors, the sort of so-called mum and pop or ma and pa retail investors? Is there any ability for them or options for them to be investors in New Zealand government debt?
Yeah, absolutely. So our bonds can be bought by retail investors either directly or indirectly. So we have a special product just for retail investors called Kiwi Bonds. And in order to be able to apply for those, you have to be a New Zealand resident, and they're issued with different interest rates from maturities between 6 months and 4 years. And you can buy them directly through our registrar, which is Computershare. To be honest, they're a very small part of our overall borrowing, but our generic New Zealand government bonds can also be bought by a retail investor, but only once they're trading in the secondary market. So when we first sell them, you need to be an institution that's a registered tender counterparty to get them first in the wholesale market, and then they can on-sell them. And you, if you want to get some of those, you can get them in a parcel of 10,000 New Zealand dollars and then multiples of $1,000 thereafter. So yes, they're definitely available in those two forms to retail investors.
And how does an entity get to be a registered tender counterparty? And are we talking about banks and pension funds and those types of entities here?
So they're essentially banks, both domestic and offshore. Currently, we have 8 registered tender counterparties, and they're listed on our website for transparency. And there's quite strict criteria that you need to go through to become eligible. And there's a requirement and a commitment to have ongoing support for our market. There's some requirements for credit ratings, and you need to be well set up as a business to support us in those primary activities.
I'm just curious in terms of how decisions are made about how much is borrowed. So, for example, with an individual bond issue, I mean, obviously that's one thing.
Yes.
And then at a more macro or bigger issue, the overall amount that is borrowed, say, every year, I mean, how are these decisions made?
Yeah, so if we start with the macro issue, twice a year, so at the May budget and then at what we call the half-year update in December, the Treasury, they aggregate all the information about the outlook for the governments, the forecast revenues and the expenditure plans. And if the expenditure is forecast to be more than the revenue that the government collects, largely through taxes, then you'll end up with a cash deficit. And so the government then has the option to borrow to cover that gap. And that's where my team comes in as New Zealand Debt Management. We determine the precise amount that we will need to borrow within financial markets by issuing our bonds, and we seek the final approval from the Minister of Finance. And we have forecasts for that go out 5 years, and we review that every 6 months. And then we also consider, well, how are we going to borrow that within the year? So rather than doing it in one big lump sum, we spread it out throughout the year, and we do it either via weekly tenders, which are sort of weekly auctions, or we do it via less frequent syndications. So that's really how it all comes together through that sort of process.
Okay. And once the bonds are issued and the investors send their money into NZDM, where does the money go? And can you track the proceeds of individual government bond issues directly to follow where it goes and what it's used for?
So the money comes in and is held in our account, and you can't directly link those specific proceeds to specific expenditures. It essentially gets mingled with all of the other government's funds that they have from taxes, etc. So it's not directly linked to an expenditure. However, there is one exception to that, and that's the proceeds that are raised by one of our instruments called green bonds. They're quite a new instrument. We issued our first green bonds in November last year. And so the proceeds raised from green bonds, they need to be directly linked and applied to expenditure that is related to climate and environmental outcomes. And so we do have quite a strict framework that aligns to global best practice and has strict criteria. And so in that case, you can see the link between the proceeds and the expenditure, and there's a requirement upon us to report on that, to monitor it, and to show how the money raised is being used not only to create not only linked to expenditure, but also to report on the outcomes that come from that expenditure. But as I said up front, that's the exception rather than the rule.
Okay. And you talked about how the process works in terms of obviously the budget and the half-year economic and fiscal update, establishing the size of borrowing for the year, and then you obviously with Treasury and the Finance Minister, you organise that on an annual basis. But in terms of the total that NZDM can borrow at any one time, so I guess the total amount with your bond issues going over up to 30 years in duration. Is there an upper limit on how much NZDM can borrow? And if so, how is this established and what is it?
So each year we're required to get the minister's approval for the exact dollar value for the upcoming year. So the minister will have been part of the decisions, so that shouldn't come as a huge surprise, but we are required to get approval for that dollar amount. Cumulatively, that then leads to the total amount of debt that you have on issue. That's not determined by us, that's determined by the government's fiscal strategy, and they will be guided by some high level metrics. For example, at the moment, the government looks quite closely at the total level of net debt to GDP, and has a principle to keep that below a ceiling of 30% of net debt to GDP. And so that will be informing the ministers when they're making their decisions, and that will then be sort of the envelope within which we are working. But we're implementing, we're not making the fiscal strategy, if you see what I mean. Yeah.
No, absolutely. And look, in terms of the currencies that you borrow in, obviously you borrow in the New Zealand dollar, so New Zealand denominated bonds. Do you borrow in any other currencies? And if so, which ones and why?
Yeah, so we do have the option to borrow in different currencies. As it happens at the moment, we are borrowing almost exclusively in New Zealand dollars. And that's because we want to focus on a really well-functioning New Zealand dollar market that's really liquid. And we also consider a relative price. And at the moment, it's more economic for us to issue in New Zealand dollars. We're also very fortunate to be able to borrow in our own currency. Global investors are obviously confident in the stability of our currency and the viability of us to be able to pay back, whereas some other maybe more developing countries don't have that luxury of being able to issue in their own currency. That said, in the past, New Zealand did issue in other currencies. I think back in 2004 was the last time we issued long dated foreign currency debt. And then in the short dated space, as I mentioned up front, we do have an ECP program that stands for European Commercial Paper, and that is short dated, so it's less than a year, and it may be as short as several months. And here we do issue ECP in US dollars. So that, and we currently have about 2 billion New Zealand dollars on issue of ECP.
Okay, so that's currently the only non-New Zealand dollar denominated debt you have on it.
Yes.
Okay. What about? how closely you watch what other countries do. I mean, I note that you closely tend to align maturities with Australian government bonds.
Hmm.
Why do you do that? And also, I guess maybe as a second question that's part of the same question there, but
Mm.
do you have any sort of countries you view as your key competitors for investor interest?
Yeah, so with our bonds, we're looking to appeal to investors all over the globe. As you can imagine, they're often very busy, they have very large mandates, and essentially, New Zealand is entirely discretionary part of their portfolio. So we're not like US treasuries where investors are required to hold them. So it's very much a choice. So we do everything we can to make that decision to invest in New Zealand government bonds easy for those investors. And we think by aligning our maturities to Australian Commonwealth government bonds helps them when they're trying to compare the two investments. Some investors, they trade the spread between those two bonds, and we're simply making it simpler by aligning those maturities. Uh, when we think more broadly about what are the competitors for our investors, I guess it really depends on what the investor's mandate is. So if the only thing that they're allowed to invest in is New Zealand fixed income, so then the investor will be sitting there and they'll be weighing up how does our risk-free return on government bonds compare to, say, a riskier corporate issuer. So that's the competition there. But if an investor's got a global fixed income mandate, they'll be comparing our New Zealand government bonds to other sovereigns. Australia is an obvious one, as I've already mentioned, but it can be any other sovereign, and they may compare the bonds on an outright yield basis, or they may be looking at it, how do those yields compare after you've hedged out the currency risk? So it really depends, I guess, on their mandate. Ultimately, we can't uh, really control their decisions. All we can do is try and keep them really well informed, make sure they've got the best information, and have a really structured annual engagement strategy.
And what are some of the key questions that investors will typically ask NZDM? And I guess moving on a bit from that is also what's your sort of key selling points when you're pitching New Zealand government debt to investors?
Yeah, so once again, the conversations can be really quite varied. Some you might go to an investor in New York and they really just want to cut to the chase and talk about the really nitty gritty of the bond portfolio, the funding strategy, what's upcoming issuance. You could go and see another investor, let's say they're based on the continent, and they may be much more interested in the macroeconomic backdrop and trying to understand what might be driving the decisions of the Reserve Bank, for example, which will then impact on our bond yields. So it really can be quite diverse. So we try and be really well equipped to answer all those kinds of questions. Generally, investors, they like the fact that our bonds are very highly rated. We have a very high sovereign credit rating. And then in addition to that, our yields are generally a little bit higher than some of our equally rated peers. And they're also looking for diversity. So they like the fact that sometimes our economic cycle is not 100% correlated with some other investments they might make. So they like that diversity benefit as well.
And you just mentioned that the yields on the New Zealand bonds are sometimes higher than other countries' debt with similar, I guess, sovereign credit ratings. Why is that?
There's numerous research being done over many decades on this phenomenon, I guess. I don't have the definitive answer, but you could say that often our OCR structure can be a little higher than some other parts of the world, but it's something that certainly investors appreciate. But weighing it up against all the other elements, like how liquid are the bonds, how easy will they be able to sell them in the secondary market, those kinds of aspects as well.
And we're obviously in a rising interest rate environment or a high interest rate environment at the moment. Hopefully, it's not going to rise. Hopefully, hopefully, interest rates aren't going to rise too much further. Says the borrower in me, maybe not the saver. But What does a rising or a high interest rate environment mean for NZDM? Um, and how closely do you track, I guess, the rise that may cause in government debt servicing costs or interest payment costs?
Yeah, so if you think about our position, we don't directly control the interest rates at which we issue bonds. They're set by the prevailing market rates, and the prevailing market rates are usually defined by a combination of the current official cash rate as set by the Reserve Bank and some influence from generally yields on other sovereign global bonds. So there's sort of a combination of those two things. So we can't just choose where we want to issue. Therefore, we do pay a lot of interest, a lot of attention to a rising interest rate environment. We track the total debt servicing cost closely. And if you care to look, these are published in the Treasury's economic and fiscal updates, twice a year document. And you will also see quite often we do some sensitivity analysis. So we run some scenarios and we say, oh, under this scenario, what impact might it have on interest costs?
In terms of the terms that you issue the bonds for, or the maturity of the bonds, I think I'm right in saying the longest issued bonds that NZDM has issued are 30-year ones. So that 30 years sounds a long time, but then, I note some other countries, Austria, for example, during the height of the COVID period, issued 100-year
Mm.
bonds. How do you determine the tenor or the maturity or the term of the bonds you issue? And would you ever go out further than 30 years?
So currently we've got about 15 nominal bonds and 4 inflation index bonds on issue. And as you rightly point out, the longest is a 2051. And when we issued that for the first time in September last year, no, September 2021, it was close to a 30-year bond. And that was the first time that we had gone beyond a 20-year point on the curve. So that was quite a significant extension for us. And partly we were enabled to do that because our borrowing program had increased with the onset of COVID. So we felt confident that we could both maintain our existing bonds and our key benchmarks and also had sufficient borrowing to extend out to that 30-year point. When we're considering about where to issue bonds, we take into account a number of factors, some to do with the structure of the Crown's own balance sheet, but we also consider how do we best capture and stimulate investor demand, and how do we promote a really well functioning and liquid market. So we're pretty comfortable with where we are at the moment with that 30-year point. We don't have any imminent plans to issue sort of beyond that point.
We talked about the high interest rate environment. Of course, it's a high inflationary environment at the moment too, and you do issue inflation indexed bonds. Do you see an increased interest in those at a time like this when inflation is high?
Hmm. So you might expect so. So inflation index bonds have a coupon that is indexed to inflation. So the value of your regular coupon is protected against that high inflation period. But it's been interesting for us. We have seen our inflation index bonds outperform their generic equivalents over the past couple of years, but we haven't seen any significant change in demand. So the investors that hold inflation index bonds are a small subset of the investors that hold our generic bonds, and the proportion that's held offshore is lower than for our nominal bonds. It's pretty steady, around 30%. And also when we look at our data that shows the turnover in the secondary market, that's also not showing any notable pickup. So we've heard a few rumours about retail demand for inflation protection products, but we really haven't seen anything that's of particular note, which is actually quite interesting when you think about how topical inflation has become in recent times.
Absolutely. It sure, yeah, sure has. So, just in terms of how you repay the bonds, now you do, from my understanding, you do sometimes repurchase bonds prior to their maturity. I'm just wondering why you do that. And also, a lot of investors obviously look to, I mean, we're talking about institutional, professional investors
Yes.
here. They look to roll over the investment into a new issue. We talked a little bit about that.
Hmm.
So, how often does that happen as well?
Yeah, so our nominal bond lines, they have a cap. So the maximum we can have in any particular maturity or any particular year is 18 billion. And then as that comes towards its maturity date, we're aware that we're going to have to repay that. And so sometimes it makes sense for us to start buying back that bond within an 18-month window before it matures, so we're not having to do that all on one day. So we just smooth that over a few months period. And we're also trying to encourage those investors who are selling that bond to reinvest further out the curve. We don't have any precise data that shows whether that occurs or not. And as I've explained earlier, when an investor buys a bond, they don't necessarily hold it right to the maturity. They may have sold it and bought it a couple of times in the market. But what we do know is that a lot of our investors are very loyal to our market over years and even decades. And so I think it's reasonable to assume that some of those proceeds that mature will then, they'll be looking for opportunities when the time is right or the price is right to then buy other new or existing New Zealand government bonds.
Now, obviously, through the height of the COVID period in 2020 and 2021, we saw the Reserve Bank embark on quantitative easing for the first time in New Zealand, the large scale asset purchase program, through which they bought New Zealand government bonds and some local government bonds as well, billions of dollars worth. And they're now selling $5 billion worth of these back to NZDM every financial or fiscal year. How big an impact did the RBNZ's quantitative easing have on the New Zealand government bond market? Or is it still having indeed?
Yeah, so it's always difficult to ask these questions in hindsight. You don't have the counterfactual, but I think it's important to note the decision to buy bonds was an independent monetary policy decision by the Reserve Bank. It wasn't at the request of the New Zealand Debt Management. The immediate effect that we observed was an improvement in the functioning of the New Zealand government bond market. At that time, like right across the globe, bond markets were quite volatile. And for example, one simple measure of the market's functioning is the spread between the bid and the ask of a bond. So, how much people want to buy and sell it. And that spread, that bid ask spread, had really widened during that time, suggesting there's a little bit of stress in the way the bond market was functioning. And then, after the Reserve Bank started its purchase program, those types of measures returned to more normal levels. We also saw in the early days of COVID, the yield on New Zealand government bonds and many other bonds globally had spiked higher given the uncertainty in the outlook. And after the Reserve Bank started its program, those yields declined towards more normal levels. So, as I said, it's difficult to say what would have happened in the absence of that, but those are a couple of observable sort of data points. And now we're getting to the point where the Reserve Bank has made the decision they'd like to sell down that holdings, which at the peak, I think they were somewhere above 50 billion. So they're now selling them back at a rate of $5 billion per fiscal year. And they, along with ourselves, once again, have a really shared interest to make sure that that is done in a way that does not disrupt the market. And so, a good way to do that is that those bonds are sold back to ourselves, and then you don't end up with two government departments selling bonds into the market at the same time. So, it makes it a lot clearer to investors that NZDM are the ones who are issuing bonds into the market.
So then, when NZDM buys these bonds back from the RBNZ, what are you then doing with them? Do you then sell them into the market?
So essentially, you could say they're cancelled, but we have already factored that into our borrowing program. So when they first made this announcement, we incorporated that into our bond forecasts. And at that time, it did mean an increase in our borrowing program, but it's now already embedded. If you look at our numbers, the 5 billion per year is already captured in those numbers.
Okay. What about other funding mechanisms? Are there any other funding mechanisms that NZDM is able to access if and when necessary?
So our aim is to keep the bond market really well functioning, and in fact, we have, I guess, what we call a liquidity buffer, which means we have an excess of funds to help us through times when markets might be a bit dislocated or there might be an unexpected sudden need for cash. Over and above that, we also have a standing overdraft facility on the Crown Settlement account with the Reserve Bank that's set at $5 billion if required. So that's, I guess, would be sort of another tool if indeed it was necessary.
And am I right in recalling that I think in 2020, that limit was lifted from 5 billion, I think maybe to 10 billion for a one-off bond repayment?
So we made an application to the Reserve Bank for a temporary increase in that. I think in hindsight it was not required, but it was very useful for us to know that that facility was there if indeed we needed it.
Okay. Now, obviously, a big part of your job is risk management. So, I mean, what are the key risks for NZDM?
So I think it's just keeping abreast of the information flow to our investor base. As I said up front, most of our investors, it's entirely at their discretion whether they buy our bonds or any other sovereign bond. And so the risk would be that either they forget about us or that they have information which makes them less willing to buy our bonds. So as I said previously, the best that we can do is one, to keep them well informed so they don't forget about us and keep the credit lines alive, and then provide them with up-to-date information, regular engagement with the credit rating agencies as well.
Yeah, so that those New Zealand sovereign credit ratings, obviously, they're strong ratings, and they must be quite important to you.
Yeah, so we have 3 credit ratings from Standard & Poor's, Moody's and Fitch, and they are important because some investors actually are not able to buy your bonds unless they have a credit rating. They also provide an independent view on how New Zealand is doing relative to other sovereigns and the risks associated with investing in a particular government bond. That said, though, I think the prospects of a country are changing constantly, and market participants are usually already discussing that and factoring it into prices before a change in a credit rating. A credit change in a credit rating is probably almost just confirmation of what markets are already thinking. But New Zealand is quite fortunate to have some of the highest credit ratings in the world. We've got AAA rating from S&P and Moody's and a AA plus rating for Fitch for our local currency. So that's something that's certainly beneficial for New Zealand.
So you mentioned before that you've got some investors who are very loyal and even have been investing in New Zealand government bonds for decades. So how often do you sort of get in touch with them? I mean, if there's something happening in New Zealand, are you sort of on the phone or email or some other form of communication to them regularly?
So we, at the start of each fiscal year, we lay out quite a structured annual engagement plan, and that includes everything from research we publish on our website and distribute by email through to uh, participation in conferences and then meeting one-on-one. And so that's all part of the strategy. Over and above that, we're also quite dependent on our registered tender counterparties who have lots of very close direct relationships with our investor base, and they will be providing their own independent research. They will also be making investors aware of things that have come up. So a combination of our own direct access and the conduit of the registered tender counterparties is how we try to keep our investors engaged. And we try not to be so reactive, we just try and be very regular and keeping them informed.
Well, look, Kim, that's great. Much appreciate hearing from you today. That is Kim Martin, who's Director of New Zealand Debt Management, which is the Treasury unit responsible for managing the New Zealand government's debt. And I'm Gareth Vaughan at interest.co.nz with another episode of our Of Interest podcast.